The restriction of persons from doing business with government, I'm not going to spend too much time on here. There's the notify them of the intent. The accounting authority must assess, provide reasons, may regard the intended restriction not objected to should the person fail to respond, and then have got to give some. So I think this is just giving a little bit more clarity on that process around restricting a person from doing business with the state. That certainly is there. I don't think there's any huge issue here. Except that this now is going to have to apply also to all the Schedule 2s and 3Bs and 3Ds. Deviations from normal bidding process. This is a really interesting one, everybody. This is deviations from normal bidding process. I'm not sure if this is going to be re-looked at after the Zondo Commission's report came out. The accounting officer authority may deviate from inviting competitive bids if, in a specific case, it is impractical to invite competitive bids and may procure the required goods or by other means. So this is really almost exactly what we currently have in the regulation. May deviate from inviting competitive bids if it is impractical. Procurement by other means referred to above would include limited bidding, contract expansions, variations, or extensions, written price quotations, and procurement in emergency situations and urgent cases utilizing any of the aforementioned processes. So I welcome this. I mean, they have now brought in urgent. We have not had that in more recent. Talking about limited bidding. Limited bidding is defined is the process whereby bidding is reserved for a specific group or category of possible suppliers through procurement by sole source, single source, and multiple source limited competition. Sorry, where am I? So they define that, and then they go on to say that procurement by other means must be provided for in the SCM policy. So there's a lot of policy implications that then come into this. And then they go through and say the policy must include the following, and describe what they mean, what the requirements are of your policy around this. Let's not jump into this yet. Let's just finish the rest of this before we decide how we respond to this one. So there's a whole bunch of stuff. When procuring goods or so through a limited bidding, must ensure that the necessary supply management governance requirements, including the prescript related to professional, are adhered to in the procurement process. Interesting to see that they have not, when they're doing limited bidding, they have not made any reference here to the bid committee, but just generally the necessary supply chain management governance requirements. I'm sure Tundi would have something to say about this. Then it goes on to say accounting authorities must, within 10 working days after the finalization of procurement transaction, report to the relevant treasury and the AGSA where goods or services above the value of 1 million were procured by other means. Accounting officers of the accounting authority must ensure that all procurement by other means above the value of 1 million must be recorded in the annual financial statements of the institution. What you may have noticed is there's no reference in here to requesting approval from the relevant treasury. This is all putting it right back into the realm of the accounting officer, accounting authority, and saying you need to, at your institution, you need to describe what you mean by other means, and you need to ensure that your policy is detailed in terms of the processes that you will follow in terms of the deviations. And if it is above 1 million, you need to report to Treasury after the finalization of the transaction report has been done. And then you also need to report this in your annual financial statement of the institution. Any comments? I think the first one, hey, Sanele, go ahead.
No, mine is not necessarily a contribution, but it's just a two-phase comment. I'm happy with this one. In fact, the point that you just raised, because as Treasury, as provincial treasuries, we've been inundated with deviation requests.
Yes.
And I can tell you now that when I saw that part, when I was reading this last year, I was very happy that the accounting officers will take responsibilities for
as the regulation says at the moment. Yeah.
Yes, in fact, it was supposed to be like this from the onset.
Yeah.
However, I do have reservations. Although I'm happy there's a relief, but I know for a fact that there's a huge disaster that is coming, because based on the deviation requests that I have dealt with, I've received, which were signed off by the accounting officer of that institution, you could see that this shouldn't have been here. And majority of them, you'll find that you'll either request additional information, or you'll either request, if it's a project, you have to go on site, and you'll find that maybe the whole submission has to be rewritten in order to accommodate these things that have been missed by that particular project manager. So I see a huge, a significant growth in the irregular expenditure that will be picked up by the Auditor General in the upcoming years because of that. But I'm happy because we are no longer responsible for their work.
But I'd be worried if you're saying that although it's less of a workload for you at a provincial treasury, you'd be concerned with the ability of some of the institutions to actually do this properly. Do you think that having a focus around jacking up the policy might be better?
Sorry, I missed you there, Sean.
Do you think it will be? Do you think it'll be better if what the approach that National Treasury are taking with this one is saying, get your policies done, get your policies detailed on the processes that you will follow when you do deviate? Do you not think that that is going to be enough to just get institutions to focus on putting a good policy together and then complying with the policy? Because I don't think there will be irregular expenditure issues, because it's all pushing it into the institutions realm, right? They're not going to. There's not going to be non-compliance with national legislation issues. So let's
put it in their policy.
Mm-hmm.
Yes, they might put it in their policy, but the experience tells me that the institutions they do have policies for the sake of compliance. Very few supply chain practitioners can tell you what does the policy say when they're carrying out their FDM processes. And I'm saying this because at some point I had to review one of the policies for one of the institutions, which gave some sort of a blank check to say all the single source we will be procuring through single source. For instance, the advertisement on radio, we will be procuring through the single source. And they said because the policy was signed by the HOD, so the rest of the procurement that happens under that provision does no longer need to go to the HOD. So can you imagine that? That's why I'm coming from to say there will be a lot of irregular expenditure that may be as a result of this. But anyway, we need to capacitate our client department.
Thanks, Sanele. Lindiwe?
Yeah, I hear the argument of Sanele and yourself, Sean, but I think I want to agree with you that having a watertight policy is going to be very important in this regard. However, my concern is still interpretation of what one will consider as sole source and what National Treasury will consider as a sole source. We've had instances whereby we've reported deviations above 1 million, and you know the kind of some of the commodities that we procure. And then the Treasury then will come back to us and even copy AG and disagree that no, this is not actually a sole source. You're supposed to go through a single source route. So I think I agree with Sanel when he says that there might still be some irregular expenditure, especially when we report it as a multiple source, but then National Treasury, they interpret it differently from our interpretation. So you see, to a certain extent, I think they will still have powers. The fact that above 1 million, and we know reporting above 1 million is not a new thing. It has always
been there.
Yes.
But Lindiwe?
Yes, Sean?
All this is saying is that whenever you don't do an open competitive bidding process, you must just follow the policy that you've got in that respect. They're not making any distinction between sole source, single source, limited bidding. Any other means must then just be recorded and approved by the accounting authority and be done in terms of your process. So I don't see the AG as in its current form getting involved in distinguishing between single and sole source, for example. That's going to be your definition in your policy. It's important now because of the distinction that exists that says that if it is sole source, you have the discretion, or if it's emergency, you have the discretion, you can go ahead. But if it's single source, you need to get National Treasury. And that distinction becomes important currently. But in the new one, it looks like it might be a little bit easier for you.
To a certain extent, to a certain extent it will, Sean. But and the other thing is that currently there's only one piece of document which describes, or two. No, the other one is going to be repealed. We currently have the Guide to Accounting Officer, which only describes what is a sole source, what is single source, and what is multiple source. So our policy should not deviate to that definition from the Guide to Accounting Officer. However, my argument still stands that I will report a deviation based on how my policy interprets sole source and all that to Treasury. Yes, and say this is sole, and attach the relevant documentary proof. However, they will have a contrary view, which can result in AGs declaring that transaction as irregular, because from experience, as and when they give you feedback to say that no, they are not in agreement with you, they always copy specific person at AG who's responsible for your account at your institution.
Lindiwe?
Yes, Sean?
Do you think there is something in here that we should go back to Treasury with and ask them to change?
Yes. 7.2 specifically. If you look at 7.2, I don't understand why contract expansions and variations are included.
It's weird, hey? It's weird.
Yes. I don't understand why those things should form part of limited bidding when that expansion or variation, you went through an open competitive bidding process. For me, it's very confusing. I don't know.
Very weird.
Yeah, it's very weird. I don't understand what they're trying to say here.
And particularly because we've got an extension section, which we're going to cover shortly.
Yes.
Well, expansion section. Thandi, and then we'll go to Hermie. Thank you, Lindiwe.
You know, Sean, this is where, again, I appreciate MFMA, because with the MFMA, I think it's section 36 of the supply chain regulation, where they actually outline when can you deviate For example, there's where you want to buy works of arts, where you want to buy animals for the zoo, and then soul supply is also there. You know, that's the nice thing about it, that they've already kind of restricted for you that these are the categories of deviations which you can have. Whereas with PFMA, there's all this open-ended thing whereby AG now start making their opinion law. And that really frustrates me about auditors, is that they will have an opinion about something and their opinion all of a sudden becomes law. And I really, really wish that, I'm hoping that this procurement bill can somehow merge the two pieces of legislation and start taking also the good from the MFMA, because my view has always been MFMA is there to fix any shortcomings of the PFMA. But I would think that people from municipalities, they will not have these questions, or maybe if they would even have them, first Treasury will have to rather talk about the SCM regulation and then which one takes precedence over and above these circulars or practice notes. Thanks.
Thank you, Thandi. Hermie, I would like to hear from you. I know that Thandi may have said the same thing, but your perspectives, Hermie?
No, I agree with her. And National Treasury will have to be clear on what is taking precedence, because the regulation, as I have it, is applicable on PFMA and on MFMA, and there they detail on how a deviation, how you deal with it, and to include contract expansions and variations or extensions, you have a separate process in terms of section 116 of the MFMA that you must follow.
Also,
so yeah, and I just want to know from the other people on the floor, do you only follow deviation process when it comes to bidding processes? So for me, it's a tender. And on quotations, you don't do that. How do you treat it? Do you treat it in terms of regulation 16 and 17, where you could not obtain 3 quotes or whatsoever your thresholds are?
So maybe I could just respond on that one, Hermie. Yes, the deviation is applicable to tenders. And I think it's a little bit different now with quotations, in that in the PFMA there is a very different instruction that was issued and affected the 1st of August last year on quotations. And it's not just a deviation if you don't get 3. There's quite a few different aspects to it on the quotation side. But maybe Thandi is going to add a little bit more to what I've just said. Go ahead, Thandi.
Sean, my understanding of deviation is that we are saying we are not following an SCM process. So if you go out on the market, you don't get 3 quotations. You have followed an SCM process. However, the market did not respond. Hence, you'll have to document the reasons why you're not having 3 quotations. But with deviation, you are saying this is a prescribed process and I'm electing not to follow it. And then you document your reasons why. Answering the question in terms of quotations, the same will apply even with quotations. I mean, the different organizations I've worked with, I've even seen accounting officers going as far as giving delegations on deviation on quotations. To say that, I remember this happened when I was in municipalities. Quotations were up to 30,000, whereby the accounting officer will say the CFO can deviate for procurement up to 30,000, meaning that if something is 15,000 and for whatever reason it's urgent, the CFO we choose to go for one supplier, then the CFO can approve such a deviation. But a deviation, we are saying we are not following any normal process that has been prescribed. Therefore, we'll document the reasons why. That's how I understand it.
Thanks, Thandi. Sanele, quickly, and then we'll just move on to the last point. Go ahead, Sanele.
Sure, thanks, Sean. I think on this one, I had a point with regards to the VAT, the VAT. There's a situation that the institution now and then says they award the service provider, and at the time of award, service provider, the bidder, is not a VAT vendor. And when they are rendering a service, they become a VAT vendor. Now they have to bill the institution, including VAT. So that also now creates a serious lack of uniform and how do they address that? Personally, I think the institution must pay that additional money that is for that, because it doesn't go to the service provider, it goes to SARS. Now, I think the variation in this case is necessary. So I think maybe the instruction must also detail that aspect that anyone who has been awarded and subsequently they become a bad vendor, that also must be considered, because if you look at the contract, for instance, for security guard, there are still a rate private security industry, and it is there is a minimum wage for a security guard, and they are overhead. So if the service provider in that aspect is rendering a service which has been awarded without VAT, and subsequently they become a VAT vendor, and you are saying you are not going to pay that VAT, that means now that VAT will go and eat from either the wage of a security guard or the overhead of that particular service provider, but it has to take somewhere. So I think in this case, in terms of the variation, we need to consider including the VAT and how to address it. Thanks.
Thanks. Thandi, you want to?
Yes, Sean, I want to come on the issue of VAT. Economic benefits are not only in rents and cents. And I'm of the strong view that it is unfair to companies that are not registered for VAT to be viewed in the same light as VAT vendors on the basis that VAT vendors are actually collecting money for SARS. What is very material that we are forgetting is that VAT vendors have a benefit of claiming back the VAT on all the VAT taxable items they procure. And then the non-VAT vendors don't have that benefit. And this is why I'm talking about economic benefits. So this thing of saying that, no, they're paying it to SARS, I don't think, colleagues, it is correct. Because the very same person who's paying over to SARS, there's some economic benefit that they get, whereby when they pay VAT, they're going to claim it back. If I'm not a VAT vendor and I buy things and I pay VAT, I am not going to claim it back. And therefore, when somebody gives price exclusive of VAT and is not a VAT vendor, we have to include it, because our procurement thresholds do say that we have to evaluate inclusive of VAT. However, it's quite interesting what the previous speaker is saying. I really would like to know in terms of how then do we deal with that? And that, I think SARS will be better positioned to answer that question, to say, when I register for VAT today, is that applicable retrospectively? Because if it's only applicable from the day I registered to moving forward, it's another story. But if it becomes retrospectively, then how do we then, as supply chain practitioners, are we going to deal with it? But on the issue around the VAT vendor and non-VAT vendors, please, guys, economic benefits are not coming in.
Good one. All right, I've made a note. I think we'll have a separate session one day on VAT. I think it's an important point. Last one on this for us to just recognize the change is the expansions or variations of contract. So this is expansions. This is now financial expansions. It's recognizing exceptional cases. You may deem it necessary to expand or vary orders against the original contract. The absence of this prescribed threshold for the expansion or variation of contracts has led to gross abuse. This is exactly what they said in the one that came out in 2008, I think it was. All expansions or variations of contracts should be approved in accordance with the institution's delegations of authority. And then they give the paragraph that we have seen multiple times last year, the year before last, and when was it? 2015. The accounting authority must submit a report on a monthly basis to the relevant treasury where contracts are varied by more than 20% or 20 million, whichever is the lesser amount for construction-related goods or services, and 15%, whichever is the less amount for all other goods or services of the original contract value. The report must report submitted to the relevant treasury, and the AGSA must include the detailed reasons for the approved expansions or variations. Wow, interesting. So 2 big points on this one. One is that it is not requiring you to go to the treasury and request permission prior to expanding beyond these amounts, number one. Number two, this might seem small, but whichever is the lesser amount has been missing ever since the first instruction came out. And there's always been an issue about the 20% or the 20 million. And so this is back in again. So quite significant, I believe. Again, not giving Sanele and his team at the Provincial Treasury less work to do, potentially less work to do. But it is now a report on a monthly basis to the relevant Treasury on contracts which have been varied by more than the 20%, 15%, or whatever is the lesser amount. Accounting authorities must ensure that all variations, extensions above the threshold prescribed must be recorded in the annual financial statements of the institution. Relevant Treasury may request additional information if need be. Hermie, go ahead, Hermie.
Just a question. I'm just thinking about this. When they speak about expansion or variation here, they refer to amounts, but they don't speak to time.
Correct, correct. In this particular one,
what I want to know is, say for instance, you have a term contract for
security guards,
construction material,
okay,
and you did put out a tender timelessly, but still something went wrong during the award process or with appeals and everything, and now you have to extend your contract. Now, we do then a time extension, but what if, must you also then go and calculate, because it's not actually possible, it's an operational tender, go and calculate whether when the 15% or 20% is also exceeded, because we usually extend on time, not on construction projects. Then it's easy to go and calculate the 15%, and then you follow section 116 if we are going to go beyond that. But yeah, it's not a time thing.
And it's yeah, interesting. You're probably making a lot more use of kind of framework agreements and as in when type agreements as well at the municipality on these construction projects, Hermie. It is, yeah, interesting. Let me give it some thought. Henry?
Thank you.
Yeah, this is just I mean, obviously, I know it's a significant departure from, obviously, from the previous instruction, and you highlighted that. I hope, and obviously for institutions and proper institutions that that want to do, it's a good news thing. I just hope that this doesn't create other findings further down the line in terms of where people then abuse this particular, the way that they structured it now, and abuse the expansions space going forward, because then it creates, like, afterwards obviously findings from the Auditor General, etc., etc. Yeah, but this is significant. Sean, it's a significant.
Yeah, it is. Yeah.
The other thing as well as I would assume by them saying, you had it here somewhere, let me just see, where they say that the report is monthly, and obviously my assessment would be assume that monthly, so what you've approved in the month you submit, but it doesn't very clearly stipulate. So it's kind of assumed that, if you've approved an expansion in a particular month, you report in that particular month. They didn't say that you have to submit it within X days of the approval or something like that. So that could also potentially be people could abuse some of those things. Anyway, that's just my 5 cents.
Good one. Thanks, Henry. Good. All right. I actually thought this was the last point, but it's not.